How are we feeling today, folks? Thursday, comps day for the graduate students, for most of the graduate students. How are you all feeling? Yeah, that's about it. That's about right. Yeah. We just not so we did. Yeah. Yeah, that would be wonderful if it was just like April 1st and I'd say April Fool's Day. Yeah, so you all know how I feel about examinations. I'm not a big fan of examinations, and so we're told by Truman State that for master's programs that you actually have to do one of two things. You have to do a capstone research project, or you have to do examination. And neither of those is really a very favorable outcome. So unfortunately, that's what we're left with. So I don't want you all to be too nervous about it. To my knowledge, since we've had this new form of exam, and it's been roughly 10 years, everybody has gotten through who's taken the comps exam at some point or another. Now, sometimes that does require not reciprocity, remediation. I don't know why I was blanking on them, but remediation of the exam. I did have one student who had to remediate the exam like 3 times because they kept giving me information that was very obviously plagiarized from external sources. One of the times they quoted me. So I was like, I'm pretty sure you didn't write that information because I know I wrote that information, and I linked them to the site online where it showed that I made that quote. So, but I said I appreciate you linking what you think is a appropriate authoritative source, but yeah, this is supposed to come from your words. Yes.
So in comps, will we have access to we'll just be having access to the question, right?
Right. You don't have outside resources. Right. This is a remediation where remediation generally you do have to write a little bit more detail. So I haven't really talked about remediation, but I can talk about that real quickly. So for remediation, basically all that means is that you did not pass 2 out of 3 comps questions. So you'll basically choose one of the professors to say, I want to remediate with you, and then we'll give you a onerous task like labor of Hercules to complete. But you'll have plenty of resources at your disposal. And I would encourage anybody who does have to remediate, first of all, don't panic. It's not a big deal. Secondly, don't use AI. All right. Because your professors will scrutinize and say, did you use AI for this? And you'll say, no. And then I'm going to say, all right, well, let's go ahead and review this and see how much of this you actually know. And then you'll be screwed. All right. So make sure that you write it all yourself. That's all that you really need to know. If you do that, you'll be fine. I have no confidence, no doubt. I have no doubt that everybody in this room that's taking comps this evening will inevitably get through the comps exam. The vast majority of you will do it on the first try, so don't worry about it in either case. And I realize it's not relevant to everybody in this room. I don't know. This is what you got to look forward to, Jack. Yeah. So yeah.
I'm excited.
Excited. All right. What I'm going to do is I'm going to actually bribe all the students in this room, and they're going to tell you horror stories about it. So you have to take it next fall on your own. That's going to be.
You probably wouldn't even have to bribe some of them.
Oh, okay. Yeah. There's that. Yeah. Someone will just do it just for the thrill of it. All right, let's not go down this slippery slope anymore. Let's talk about Tyco. So we're just going to have a brief conversation. Basically, what I wrote about Tyco, I kind of did a little bit because I knew that we were going to have to do this one quickly because we've got interviews to do today. But Tyco took place right around the same time as a lot of frauds that we've already talked about. We've talked about WorldCom. We've alluded to HealthSouth. Auditing students, we got the joy of talking about Enron. But Tyco was one of those things that I think should have been a much bigger deal than it was. But by the time it came out, everybody was like, another fraud. It's about right. It's unfortunately the way human condition works is that something terrible happens. We're shocked about it first time. Second time, basically not so shocked. And by the time it happens the fifth time, you're just kind of like, yeah, it's happening all over the place. So this was very interesting in the fact that it was not a financial reporting fraud. For the most part, there were some financial reporting fraud elements, but it was a misappropriation of asset fraud. And you might even make arguments that there was elements that were not really intended to be misappropriation of assets, but it was definitely considered to be abuse in that regard. I think I'm going to go with the misappropriation of assets, but it involved basically the rapid expansion of Tyco, and this whole thing started off when they relocated from New York to Florida. This is something that was talked about in the video. So what happened when they relocated from the headquarters? They had a whole bunch of employees that had to move to Florida because most people don't have residences in both New York and Florida. So they had to relocate, which are associated with costs. And Tyco they basically said, well, you want to keep your job, you are going to have to relocate, but here's what we'll do. We're going to pay for your relocation. No, that's not what they did. Okay. They didn't say they're going to pay for the relocation. They said that they're going to actually provide a loan to cover the relocation costs. Okay. So yeah, apparently I'm on a trend recently of making statements and see if anybody can capture whether or not I made the correct statement. So be wary. I may be committing fraud a lot during this discussion. Yeah, so Tyco did that, and so it was a relocation loan, and it was open to anyone, including the executives, such as Dennis Kozlowski, the CEO, and Mark Schwartz, the CFO. And so they said, "This is a great opportunity. We can use this relocation to buy the dream homes that we've always wanted." Those when you were a kid, you saw the Barbie dream homes, much nicer than those. Okay, really, really nice. I think they said like Kozlowski got an $80 million home in Florida, and it's like, okay, that's what the program was intended for, is for the purchase of that type of home. And so, yeah, there was that. And then there was another loan program that was kind of in place. It was called the KELP program, the Key Employee Loan Program. What was that used for? For stock options, okay, for stock options, not for the purchase of stock options, but a lot of these employees, these key employees, the executives, were compensated by stock options. And I know that none of us in this room, at least I assume none of us in this room, have ever had the opportunity to enjoy stock options as part of their compensation. I'm still waiting on that from Truman State, but they tell me that they're not a publicly traded company, so I guess I'm screwed. Yeah, yeah. And in that case, stock options were one of those things that whenever they needed to get a hold of the stock options, there was going to be a lag between the time that they sold, they basically divested the stock options and when they would actually get the proceeds. And there was a tax burden that was immediately associated with those stock options vesture. And so they used the loan program to cover the stock options. And it was very specific that this was the purpose of the Key Employee Loan Program. It was not to be used for other purposes. But Dennis Kozlowski and says Mark Schwartz says, you know what? The rules don't really apply to us. We're kind of important guys. Okay. We're kind of important people. So they basically said, we're going to use this for whatever purpose we want. And that should have been enough for us to say, okay, back up. You guys are executives, but you're not beholden, you're not immune to the law. You've got to follow the rules. But if you make an argument saying these are loans, Dr. Barnes, they would eventually recover the proceeds anyway, regardless of what purpose they are. This is kind of where everything fell apart, is that Tyco was kind of forced to forgive the loans by Kozlowski and Schwartz, basically write them off and say, we're never going to collect these. So we're talking about millions of dollars of loans that were given to these executives, and they said, all right, we're going to write them off as not being recoverable. And the interesting thing is, I don't even think this right here would have been enough. I think they could have made a justification that this was completely and totally legitimate up until the point that we actually have the financial reporting issue. What was the financial reporting issue they talked about in the video? So what is required when there's some type of suspicious transaction associated with organizational activity? So we talked about this with related party transactions and auditing. What is required for related party transactions in financial statements? Disclosure of financial state or disclosure of related party transactions. So this would be a form of related party transaction, a loan to an executive, and it was not disclosed that these loans were forgiven. And that is where kind of everything comes tumbling down, because if it was not disclosed, stakeholders knew nothing about it. Now, ask yourself, if you're a stakeholder in Tyco, you could say a stockholder or some other person associated with the organization, and you heard that these executives who had gotten these millions of dollars of loans, I think the number is a little bit unclear. Wikipedia said that Kozlowski received 81 million, but the video said $250 million. So it's kind of a bit of room for interpretation there. But we'll talk a little bit about that here in just a second. If you heard, let's just go on the low end, 81 million. If you'd heard that a executive got a loan for 81 million, you'd probably be like, that's outrageous. Then you heard that some, if not all of that was forgiven, you'd probably be, that's extremely outrageous. I got a problem with that. And so that was why they were trying to disguise it. When it came to fruition, everybody was like saying, yeah, this is fraud. This is a big deal. This is a problem. So like I said, the financial impact of the fraud, the true numbers were really unclear. That's really important. So I found this site called lawfuel.com, and it said, depending on the math and the time of telling, Dennis Kozlowski and Mark Schwartz have been accused of stealing $150 million from Tyco International or looting the company for as much as $600 million. So how do you actually justify a $450 million lack of knowledge? All right. That's like governmental levels of inefficiency right there. Now you think I'm making fun of the government. It's like it's actually there was an audit of Congress. I think it was 2 decades ago. I think it was EY performed a audit of Congress, and they couldn't account for like $20 billion worth of spending. It was just not present in the records. So that's when I make that joke when I say governmental levels of inefficiency. That's kind of that. Obviously, we're not talking about an entity the size of the U.S. government, but still, $450 million. That's just not a drop in the bucket for most organizations, and certainly not for this one. What was the restitution order that they were ordered to pay? So that was in the Wikipedia article. Did anybody capture that one? So they were jointly ordered to pay a total of $134 million in restitution. Kozlowski was further fined 70 million and Swartz was fined 35 million. And so there was a lot going on there, a lot happening. And ended up happening kind of breaking down. And Kozlowski and Swartz kind of lost their jobs, and then they served in prison time, and now they're living the kind of middle life. And I gotta wonder, do you look back on that when you've got accused of a massive crime like that and you had to spend time in prison? Do you look back and say it's like kind of like a Goodfellas type of reverie? Has anybody ever seen the movie Goodfellas? The very end, the protagonist of I guess protagonist, I use that loosely, the antagonist slash protagonist of the movie is talking about it, says, yeah, I hate my life now because he was in witness protection. And he's like saying, I really want to go back to the way things were when things were cool. And I wonder if that's how Kozlowski feels now that he's living kind of in a two bedroom apartment in New York, living middle class. So yeah, some certain issues there. Okay, so relevant fraud risk factors. I'm going to rely on you guys for this one because I didn't really put anything down, but I think they're pretty easy. What do we say the pressure for the fraud here?
Luxurious lifestyle.
Yeah, and it's a luxurious lifestyle. And I gotta imagine that if you're an executive of a rapidly expanding multi-billion-dollar organization, that you're already doing pretty well for yourself. Probably not so well that you can get your company to pay for a $2 million birthday party for your wife, but still pretty well for yourself. Yeah, a little bit beyond our means. I think about that, a $2 million birthday party for a spouse, and I was like saying that is more money than I hope to retire with. So that's kind of an interesting characterization of that. So certainly problematic there. Any other pressures we could identify? What about the pressure for the financial reporting fraud aspect of this? So if Tyco had released this information, then there would have been kind of a backlash. So there kind of the pressure is to keep this information from stakeholders to make sure that they didn't know what was going on, keeping them in the dark to make sure that we don't have any problems. What was the opportunity? Obvious opportunity were the loan programs that had a very, very specific lack of controls over the protocols with the loan programs. They were used for specific purposes, but it appears that executives could abuse those privileges as long as they kind of maintained the attestation that they were going to be using this item, that they were going to be using these for the intended purposes. They could use it for whatever they wanted. Rationalization. Do we know anything about the rationalization here? So what have we talked about in previous fraud cases with respect to low thresholds of rationalization? There are some people who are just going to commit fraud, and it doesn't really require high levels of justification. So if you were talking about your own rationalization, if you were going to commit fraud, it's like, wow, the Becker exam is really hard, and they ask really, really hard questions. Becker CPA exam is really hard. AICP is unfair, and therefore I'm going to bring a note sheet in with me. And I think you could be forgiven for kind of thinking that, maybe not doing that, but thinking that you might want to do that, taking the CPA exam, but actually having that go through your head. But that's something that you could articulate and justify based on this. This is one of those ones, it's like, oh, you know what? I deserve more than the millions of dollars that I'm already earning for my company. I deserve tens of millions of dollars. And that to me is just a very, very simple relevant rationalization. I think everybody in this room could actually think that, and we'd say, yeah, that's funny. Yeah, that's a joke. Okay, I'm making to myself. But I think that there was a legitimate justification, and it was just kind of, no thought process about how reasonable does this even approach? What level of reasonableness is that? So what are the primary lessons learned from the case? So this is kind of where I want to share with what you had in this case. But mine was pretty straightforward. It was that no matter how much someone's worth, many people still believe they deserve more. And this is kind of an interesting characteristic that we've seen of a lot of these frauds, is that we've got these people who are making massive, massive amounts of money, and they won't settle for the amount of money they have. Like how many millions of dollars do you need to have before you're like, okay, that's good, I'm happy with that. Can we actually make an argument to some degree that it doesn't really matter what the amount of money is that people could have as much as they will ever need, but they use this kind of as a prestige status? It's like saying, okay, I don't need three different homes all across the United States, three different $1 million homes, but I want to have these homes so I can prove just how important that I am. I think that may have been an argument for Kozlowski and kind of his actions is that having all these places that he live in multi-million dollar frauds. What did you all come up with on the primary lessons learned from the case? What you got, Cleve?
I mean, mine's kind of similar. It kind of ties into the rationalization that I argued too, is that, you know, since the company was massively expanding, you know, it's like, I think there was this feeling of like, oh, well, it doesn't matter if we're taking out a little bit, or not a little bit, but you know what I mean? Like, we're taking stuff from the company, like we're getting all these loans, getting ourselves loans, and getting the debt.
Yeah, that's an interesting point, and I wonder if that we could make an argument for this escalation and perpetuation of fraud. So that's something we talked about multiple times in this course. You start out small, relatively speaking, and it becomes comes out of control over time. And this is one of those things that they may have had good intentions, saying, "All right, we are going to move down to Florida, and we're going to take just what we need. It's a little bit more than everybody else, but that's because we're moving a lot more items." And they kind of took out a large loan, and they said, "Well, that was easy. We could probably do that for more." And it just kind of snowballed into something that was just ridiculous. Could there be an argument for that? I think it's a very legitimate argument, a very reasonable argument. There's not a lot of detail provided on that. It's just said, here's how much they had in total, but they didn't tell you if it was a one-time thing or if it was multi-times and it just got bigger and bigger over time. Anybody else? Judge.
I kind of played a bit of devil's advocate and talked about how the tax thing could be like accidental incentivizing fraud by requiring tax payments on stocks that could not get liquidated.
Yeah, that's a good point. Now, I think this is one of those ones that we overlook is that stock-based compensation tends to be one of those things that's tied to value of the organization and tied to value of the individual. It's not a very, what's the word I'm looking for? It's not a frictionless form of compensation. There's a lot of friction associated with it, and this is one of those examples. So it's an interesting point that Troy makes is that said that this could actually be facilitating fraud just because of the nature of the transactions itself. So something maybe we should have looked at a little bit more scrutiny instead of pointing fingers saying, why did this fraud occur in the first place? So good identification. Anybody else?
That said that they wish they did it after the 08 financial crisis because they think they wouldn't have gotten caught.
Oh boy. Yeah. All right. So the time frame is just bad. We committed fraud. We just did it at the wrong time. Yeah. 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 That's one of those ones. There's actually an image in the video that I paused on because I was going through the notes and making my video. There's an image of Swartz and Kozlowski kind of caught in the same frame. And they had this just nefarious look on their faces, like, yeah, these guys are fraudsters. You know, if I just showed this picture to my class and not get any context, you would just looked and said, yeah, those guys are committing fraud. Yeah, but they're kind of a low level of sorrow in that particular situation. No remorse. It's like, yeah, we just were bad time, and we should have committed this out of the financial crisis because nobody would have caught us then. They would have been distracted. It's an interesting one I wanted to bring up. Does anybody know who Steve Ballmer is? Has anybody heard that name? So he's executive for Microsoft. Every time I look at Dennis Kozlowski, I think he looks just like Steve Ballmer. Get out of the way. So this is Dennis Kozlowski. There's Steve Ballmer. Okay. And I didn't make much more of a deal of this because I was afraid somebody in this class is going to say, kind of look like you, Dr. Barnes. And that would have been too much. All right. I would have made somebody storm out of here right then. And probably would have been me. Yeah. Yeah. So. All right, let's get prepared for the quiz.